Hi, Scott Nelson, Senior Wealth Manager at Boulay Financial Advisors with your economic review for the third quarter of 2022. Inflation continued to be the economic story of the third quarter as the Consumer Price Index remained elevated. Over the course of the quarter, the index only declined by 0.9% and remained at 8.2% in September. That prompted the Federal Reserve to respond with two increases in the federal funds interest rate of 0.75% each in July and September. The federal funds or Fed funds rate is what the Fed charges banks to borrow from it. Coming on top of earlier rate hikes, the Fed funds rate has now gone from almost 0% at the beginning of 2022 to now 3.25% now. Given that inflation remains elevated, market observers expect the Federal Reserve to announce further interest rate increases as soon as November. One place where these interest rate hikes are definitely making an impact is in real estate. The average 30-year mortgage rate is now closing in on 7%, which is its highest rate since 2002. And that's pushed the number of new mortgage applications down 39% from a year ago. As you can see on the chart, the number of pending home sales has been declining every month of the past year compared to the previous year. In August, pending home sales were down over 24% from August 2021, when mortgage rates were half of what they are now. While home sales are declining, home prices are not. The average home sale price remains above $400,000 as few home sellers find themselves in a situation where they need to compromise on price. And that's because the job market remains very tight, with September unemployment rate coming in at a very low 3.5%. As you can see in the chart, the number of new hires in August and September is trending downward, but there still remains over 10 million job openings across the U.S. This worker shortage is adding to the inflation situation as companies have been forced to raise wages significantly to attract and keep workers. Beyond increasing the cost of borrowing, the Federal Reserve's aggressive rate hikes are also a factor in the significant appreciation of the exchange rate between the U.S. dollar and other currencies. While these fluctuate daily, recently the dollar had appreciated approximately 27% against the Japanese yen, 18% against the euro, and over 22% against the British pound from a year ago. This makes trips overseas cheaper for U.S. travelers, but it also makes U.S. goods that much more expensive for international consumers, thus adding to the headwinds faced by U.S. businesses. So what to expect going forward? Should the Federal Reserve's interest rate hikes continue to push the U.S. economy towards a recession? It will likely be a bit different from other recessions in that it's not being driven by excessive debt. Neither consumers nor businesses are deeply in debt at the moment, so they're not likely to need to cut back sharply on spending to stay afloat. Likewise, given the tight labor market situation, we're likely to see massive layoffs. What we are still contending with, though, is a global economy that is out of balance due to the COVID pandemic, the war in Ukraine, and China's continued COVID lockdowns. It appears that we are going to have to continue to deal with market volatility and an economic slowdown until the global economy is able to find a new equilibrium from which it and the markets can return to a path of sustainable growth. So that's your economic review for the third quarter of 2022. Remember, need help finding balance in your financial situation? You can always reach out to your Boulay financial advisor. Also note that our Eden Prairie headquarters is moving down the street to 11095 Viking Drive, Suite 500. And we hope to see you there soon. Otherwise, until next quarter, I hope you find a way to enjoy each and every day.